In this video clip, I'm going to look at the sale of a machinery in the current year between two companies within the same group. And I hope by the end of this you'll understand now what is the nature of the consolidation adjustments required for a transaction of this nature. So on the 1st of January 2014, Jade, who's the subsidiary, sold a piece of machinery to the parent company for $50,000. At the time of the sale, the machinery had a carrying amount of $55,000 in the accounting records of Jade. So immediately you can see Jade would have recorded a loss on the sale of this machinery, but from the group perspective, the machinery should not be carried at $50,000, which would be the case from the combined accounting records, because in Laura's accounting records the machinery would have been recorded at the selling price, what they bought the machinery for, of $50,000. So we want to reverse this loss and restate the machinery at its original carrying amount of $55,000. Now, what is the knock-on effect of this adjustment? Well, the one is that the depreciation in the underlying accounting records, so in Laura's own set of accounting records, would be based on 5% of their cost of the machinery, so what they bought the machinery for. However, from the group perspective, depreciation should be based on the carrying amount of the machinery as at what it's stated at in the consolidated results, which is $55,000. So there's going to be a depreciation adjustment, and with that, the tax effect of that. Okay, so let's go and look at the journal. So once again, we've got here the accounting records of the two companies, and you can see that in just have the headings wrong way around. So in Jade's accounting records and in Laura now has the machinery included at $50,000, which was the cost at which they bought the machinery. Jade de-recognized that machinery, so they've got no value attached to it. But from the group's perspective, it has to be restated against the original carrying amount of that machinery. So we want to increase our machinery value with $5,000. That's the first leg to the adjusting entry. Debit plant and machinery, so we increase the value, $5,000. In Jade's accounting records, they would have recorded the loss of $5,000. They do it against an entry to the proceeds on the sale of the non-current asset and carrying amount of the asset sold accounts. The net effect of that would have been a loss of $5,000. However, from a group perspective, that transaction never occurred, so we don't want any loss recorded. So to reverse that transaction, we need a adjustment of $5,000 to our profit and loss. That's the second leg to the first adjustment. So there you can see the net effect of that is a credit to our profit and loss of $5,000. Now, because we adjust the carrying amount of an asset, there's going to be a deferred tax consequence, because there's a change in the carrying amount of the asset versus the tax base of the asset, and we also reverse the tax effect of the loss on the sale of the non-current asset. We then move on to look at the depreciation. Now, the depreciation in the individual accounting records would be based on the value of that asset as recorded in the accounting records of the company. So if they depreciated at 5% per annum, their depreciation expense will be based on a value of $50,000, will give us an amount of $2,500. That is correct in the accounting records of the company that owns the asset. However, from a group perspective, that asset has a value of $55,000, the original carrying amount of that asset. So if we calculate our depreciation for the group, we wanted to reflect that higher value of the asset. So our depreciation expense should be $2,750 in the consolidated results. So how do we get from the accounting record figure to what it should be for the group? We actually record some extra depreciation of $250. And there you can see it in our depreciation adjustment. The contra account for our depreciation, or the contra account to the asset, is our accumulated depreciation. So that would just be, in the accounting records, the accumulated depreciation would be 2.5. It should be 2,750. So we need a further 250 credit. Once again, this affects the carrying amount of our asset, so we've got a deferred tax adjustment, and with that extra depreciation we have to record the tax effect of that